Good morning, trading world. It is May 22nd, 2023, 8:42 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title of today's outlook, Moving the Ball and/or the Goalpost, Our Fed Charlie Brown. If most of you don't know, there's a reference from the Charlie Brown cartoon where Lucy always moves the ball when Charlie Brown tries to kick the ball. I'm implying that the Fed is Lucy. So before I get to the levels this morning, I have to talk about the interview with Neel Kashkari on CNBC, the Minneapolis FED President. There was one sentence in the interview that sticks out to me that tells me why I can't trust the government or the Fed and why they remind me of Lucy from the Charlie Brown cartoon. In the interview pertaining to inflation, raising rates, and banking default situation, he said, if we move the goalposts when we are behind, there is no reason for you to ever trust us in the future. End quote. Is this not a big part of the reason we are in the situation and putting more strain on taxpayers because of moving the goalposts and ignoring rules and contracts because a particular crowd is having trouble? In the current banking crisis, there were clear rules. Your money was protected up to $250K, and the Volcker rules were to protect banks from their own greediness and overloading and directional risk. I know I'm oversimplifying the Volcker rule, but this is just because I don't have a lot of time to go into a lot of different areas. But this is the gist of it. Now, what has happened is because banks are no longer allowed to make big directional bets, but still borrow short and lend long as a way to earn money. Risk is risk. Even if it's not in the form of a directional bet on the markets, but instead over borrowing short or over leveraging short to lend long, but you still overspent your risk tolerance. Why should the taxpayers be burdened with saving this small collection of bankers and businesses who made bad decisions? The number one thing I preach as a trader is risk over direction. If you can't afford to lose it and continue business as usual, no matter how safe you think the position is, then you can't afford that position. This all comes down to a few wealthy businesses and individuals made bad decisions in using too much leverage, and now they use their influence in government as to not have to take that loss themselves. This has happened over and over again, moving the goalposts when it is convenient for a particular part of society. Corruption, not always, but a lot of times runs along with great power and wealth. I overstayed my diatribe on this topic. I didn't mean to get too deep into it, but let's get into the weekly outlook. The SPY is bearish, closing below the 418.62 with a possible retracement of around the 413 area. There is harmony between the technical side, which is bearish, and the quant side, which is bearish. Now, the futures have a bearish bias for the week as well, with retracement possibly around the 41.68 area, with harmony as well between the technical side, which is bearish, and the quant side, which is bearish. All right, let's jump right into the key levels of the day. Starting on the resistance side, we have our Jack resistance at the 418 area, Queen resistance at the 419 area, and then King resistance all the way up at the 420 to the 423 area. I'm expecting to see rejection somewhere between this Jack and Queen resistance area, 418 to 419 area, somewhere that's going to take us on a pullback through the mid portions of the day. Now on the support side, we have our Jack support at the 417 area, Queen support at the 416 area, and then King support 415 to the 414 area. The main thesis for today is bearish, closing below the 418.62 with a projected target low of between 418 and 414. The alternate thesis is bullish, closing above the 418.62 with a projected target high of between 419 and 423. Be on the lookout and be prepared for the more explosive alternate thesis, because the futures I think are still pointed toward a bullish bias, but it does have dissonance on those futures. The main channel we are in is between 416 and 425. Now last week market strength and breadth opened with a big gap up and began slowly fading before a huge fall off the cliff, but found support early around 11:30 a.m. and consolidated in range-bound fashion for the rest of the day. I expect strength to open even to maybe a little weaker, seeing some consolidation before trying to push up on the day. We have harmony between the technical side, which is bearish, and the quant side, which is bearish on the SPY. The futures have a bullish bias for the day with dissonance between the technical side, which is bearish, and the quant side being bullish. Let's get to the scenarios of the day. All right, here we are with our first scenario, which is going to be our expanded range day structure. We could get a pre-market or early pullback rejection of resistance, and that rejection takes us down into some consolidation as we try to get it together for another push up on the day. So this is our expanded range day structure. All right, our next scenario could be our rounded reversal day type structure. We could get a continued push lower toward the Jack or Queen, more so the Jack support area. Find midday chop around either the Queen or King support before going back up with the same energy or force we went down with the first part of the day. This is our rounded reversal day type structure. All right, our last and least probable scenario is going to be our trend day up, meaning we open gap up, start with a push back toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We usually find midday chop around either the possible Queen or King resistance area. And usually what happens is we come out the second part of the day looking to continue the primary trend of the morning, but at some point it turns into a head fake and we get a fade going into or near the close of the day. Another thing to keep an eye out for is that we could get or reach a possible target and then have a failed trend day as we reject from that target. On the SPY, let's see what that first target is. That first target is around the 421 area. So it's possible we could get up here to this 421 and reject, get a solid rejection off of it. So just keep that in mind. As I say every day, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. We also keep in mind market conditions as they have an influence on the risk that we take. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.